to see where you are joining us from. So feel free to add your name and say hello from the all corners of South Africa. I see it's filling up. Good afternoon. Welcome, everyone. Hello, Katie from Mainland. There we go. All the people joining. Zelda from Cape Town. Good afternoon. Welcome. Samantha Brown from Mooikloof. Happy to have you with us this afternoon. East London, Alistair Smith. Great to have you in the house. Mareike Fourie in the beautiful Paarl region. Almarie Botma, welcome. Great to have you here. Just going to allow for a few more seconds to start it off as everyone is getting themselves comfortable in their seats before we start the session. Hi, Tracy from Brockton. Sonia now. Happy to have you, Ibrahim. A lot of people from Joburg. The cold is not scaring them away, nor is the rain. And I think still a lot of people joining the session. I hope I'm pronouncing your name correctly, Joannika. Johanna Nelv from Pretoria and Gauteng, welcome. Looking at the other screen, I can just see all the flashes of the people joining. So glad to see that we're filling up nicely. Colleen from Cape Town, welcome to the session this afternoon. Bonnie van Rensburg, close here in Centurion in Johannesburg. Or should I say Pretoria? I'm never sure. I need to gauge from the audience. Helgaard Olofse in Krugersdorp, welcome. Fani Boerta, also from the Paarl region. It's very popular. Fanu from Polokwane. Kaylee from Pietermaritzburg. And I think because this is such a popular session and so much to share from everyone, all our specialists and partners, a very hot topic. I am going to start the session by welcoming everyone. So it's fantastic to have you all joining us for this focused fee compliance webinar hosted by ourselves, LexisNexis, in partnership with Masthead. With 2026 only 51 days away and fast approaching, there's no better time than now to make sure that your RMCP updates, controls, and reporting mechanisms are ready to hit the ground running in the new year. Today's session is all about practical compliance readiness, cutting through the noise and giving you actionable insights to strengthen your compliance framework before year end. Our goal today is simple: equip you with the 3 C strategies: clarity, confidence, and compliance that holds up under audit and regulations. A big thank you to our partners, Masthead, for bringing their deep compliance expertise to this conversation and of course, to all of you for taking the time to invest and strengthen your compliance posture. So let's settle in, engage, and don't hesitate to share your thoughts or questions in the Q&A section. This is a space for us to learn and connect. Let's dive in and make sure 2026 starts with your compliance strategy, audit ready, tech enabled, and future focused. Cedric, over to you. Welcome to this afternoon's session.
Thank you, Melinda. Always a pleasure. Great spending time with you. To everybody in the session today, thank you so much for taking the time out and joining us for this very, very important topic. It is much appreciated. It shows commitment. It shows that you want to be ready. And this is something that we really need to be ready for. So our idea today is to reflect a little bit, have a look at the year that has gone past, and then also a little bit of planning for what lies ahead of us for next year. The slides that we just saw in the first line of the first slide, it makes mention of the fact that compliance is not just a tick box approach, and definitely when it comes to FIC, it is definitely the case. We are in a position where we can have a checklist, and I will be sharing a checklist with you today, but we need to go a little bit above and beyond just making sure that we're covering the basics. We need to bring FIC into our day-to-day activities, align ourselves with good corporate governance, and be proactive to ensure that we as accountable institutions remain compliant, and that we base this piece of legislation, when it comes to the actual implementation, we base it on principle, and that we've applied our mind as business owners, that not just only do we want to protect our businesses, we want to protect our clients and the greater good, play our part in South Africa when it comes to people wanting to use our organizations for unlawful activity. So again, thank you for joining. What we are going to discuss today is we're going to look at how to perform a compliance self-check before year end, as Melinda mentioned. Look at a couple of things that have happened, make sure we're up to date. What are some of the controls that we can put in place? And I will be sharing some information with you today as practical tips. So not everything, of course, is legislated, but it's our heart and it's our passion that you're not just compliant, but that you are safe as well. We'll look at the RMCP, the updates, the controls, the documentation, and then, of course, we'll look at key risk indicators and practical reporting guidelines. The information that I'm sharing with you today is not just from a legislative perspective, but also practical. Being part of audits throughout the year, not just from FIC itself, but also supervisory bodies. So the information being shared here is relevant, it's real, and it's what we see is happening. We are not ticking boxes anymore. We are applying our mind, and we are making this as part of our organization, and we need to take it seriously. We have been exited from the grey list, but the work has not stopped, and it will continue, and we will close off with that today. So why should you perform a self-check? Why do I need to go above and beyond? FIC has become very complex over the last couple of years. Yes, I had to do this, I need to do register Go AML, I need to have an RMCP, I must do this, I must do this, I must do that. It's gone beyond that. FIC has become so intricate that it needs to become a discussion point when we have meetings, when as a board we get together, we discuss things. It needs to be a discussion point needs to be taken seriously. Certain practical exercises needs to be done to ensure that we not just comply, but that we also protect. So what we need to do is demonstrate proactive compliance culture expected by the FIC. So we have the legislation part that we need to make sure that we comply with, but then going a little bit further and ensuring that whatever we as an organization decide to implement, that we stick to it, that we measure it, that we hold each other accountable for certain responsibilities and duties assigned to individuals within the organization. If we do these things, we identify gaps before external reviews or inspections. It's, for an example, a wonderful exercise to go through something which is called maybe a FIC mock audit, to have a look and see how does it actually work within my organization, get external point of view from other people, where you can perhaps better yourself, where you things that you might have not thought of when somebody looks from the outside in. Support your risk management and compliance program. The document, which hopefully most of you have, is the middle point where one starts. Everything springs from that document. Every process, every procedure, when it comes to the organization and your clients, needs to be documented in your risk management compliance program. It needs to be thorough, it needs to be practical, and it needs to speak to your business. And most importantly, it also needs to align with what the legislation says needs to be in your risk management compliance program. And it strengthens your governance record and internal reporting. Based on best business principles, looking at international best business principles, we need to look a little bit beyond just the fact of complying. We need to be proactive. We need to be able to demonstrate that we take these things seriously and we put certain things in place in order to achieve these objectives. So practically, how to perform a compliance self-check before your year end. So this is where I have a couple of minutes with you just to take you through a couple of things to make sure that this is what you have done in the last year. So the review of your risk management and compliance program needed to happen. It needed to happen more than once this year due to updates and guidance notes that was released by the FIC. The latest one, of course, on the 1st of September was guidance note 7A, the revised guidance note 7A. Because of that, you needed to go back and update your RMCP, bring it up to standard. You needed to do certain exercises. You needed to go back and look at your business risk assessment, and you needed to align your processes and procedures internally if need be. You needed to make sure that verify that senior management approval and oversight is documented. It's extremely important that once the document has been updated, that it gets signed off again. Please note the regulation on this is quite strong, that if it's not signed off, it might be seen as not implemented, because clearly legislation says that it must be signed off by the board of directors or senior management. So important to do so. I spoke about the business risk assessment. You need to make sure that the risk assessment includes clients, products, geographic locations, and delivery channels risks. Your business might have started a certain way. You might have evolved throughout the year. You might have added additional services or products, or expanded your market. If you did so, you might have expanded into international waters. You needed to, or overseas, you needed to update your RMCP accordingly. Any change that impacts how we deal with clients or how we onboard clients, we needed to go and change our risk management compliance program. So there's a legislative requirement, and then of course there's a requirement because our processes has changed. It is required by legislation that it needs to change, but these things needs to be top of mind. It needs to be discussed. So, and that's why I say we need to make this, bring it a little bit more closer to home and stop ticking boxes. Yes, I did this. Yes, I did this. I did training. We need to dig down a little bit deeper. Where did I get the training? Was it done by a legitimate organization? Did the message come across correctly? Does my staff understand what money laundering means? Do they know the processes? And then, of course, you needed to check that beneficial ownership identification is captured and verified as per PCC 59. Okay. So these are some of the stuff that we needed to look at. Also, confirm operational compliance. How does your compliance framework look within your organization? How have you made it part of your business? How do you check it? How do you test it? So, customer due diligence. For an example, the relevant individuals identified. Was there random testing done on client files? For an example, that IDs and verification were complete. Were file sampling done? Am I happy that all my documents are on file? Reporting, ensuring timely submissions. How many reports happened this year? How many did we do report cash? Did we report suspicious activities, transactions, whatever the case might be? Was it in line with what legislation says from a time perspective? Did the reporting lines work that we put in place? Because we're now just not testing the legislative part, we're testing the effectiveness of our RMCP in our day-to-day activities, which is very, very important because that's how you will be tested, not just on the document, but how does it work within your organization? Record keeping. How does record keeping do? Am I comfortable with record keepings? Are my records safe? 5 years. That's still the case. Do I have all the documents? As I say, did everybody within this year receive their FIC training and sanctions training? And was it done by somebody that's reputable, that has all the information? Do I have evidence of that training? And is it filed correctly? Everything is up to date. So these are the type of things that I need to go and ask myself, or you need to go and ask yourself. Did we do these things throughout the year? How did it work? What were we successful in our plans of execution? And I think that's very, very important. If we look to step 3, the governance, the monitoring, continuous improvement. Confirm your compliance officer's annual report has been presented to the management and board. This might not be a requirement from a legislative point of view, but from a FIC money laundering officer perspective, it'll be great to be able to report to the board of directors and management. Hence the fact that they also sign off the RMCP. Are things working? This can be done internally, it can be done externally. You might have auditors that can do this for you internally or externally within your organization. If you do have external or internal, please reach out to them and ask, are they able to perform these functions? If they can, bring it in, because it brings a layer of comfort that you are doing something and you're being proactive. Review your sanction screening controls and updated lists. Ladies and gentlemen, on the 7th of November, the TFS list was updated again. You had 24 hours to screen your client base to make sure that you have not dealt with the people that are now put on that list. Am I still doing this manually? Is this still working for me? How much time is it taking? Take these things into consideration when planning, when budgeting, and all of these type of things, because it's not going to get less. It will only increase. Document remedial actions and track completion dates. If you still need to go and do things, make a list, reach out, ask for help and assistance, and set objectives for the next year based on certain findings of what it is that you still need to do. This is crucial. This needs to form part of annual planning going forward. So a checklist, a simple checklist, just to make sure, not ticking a box, everything behind it. This has a story and a process. If required, as has been someone been assigned and appointed to ensure compliance. Am I registered correctly at the center? Do I only need one registration? Do I need dual registrations? Who is our FIC compliance officer? Is this person still adequate and can perform these functions? Has the RMCP been developed, updated? Are you sure that you've touched on all the changes that were required this year? Has the institution identified the money laundering, terrorist financing risk based on what it is that you do as a company, taking into account services, products, geographical location, so forth? Those are only examples. Do you have a proper risk matrix? You need to be able to have a conversation with an inspector or an analyst explaining the methodology behind how you put your risk matrix together by looking at your service or your product, taking into consideration that line of business when it comes to money laundering, terrorist funding, and proliferation financing. These should be detailed exercises that you do. Does the RMCP describe the institution's risk rating process? Does the RMCP have a business risk assessment that speaks to your business, specifically to your business? And does the RMCP describe the institution's onboarding process of new clients in detail and in layman's terms? Does the RMCP describe the due diligence process? Is it set out clearly? Everybody knows, depending on the risk, what documents, what processes they need to follow. Record keeping, is it detailed? Do I use third-party record keeping? Have I informed the FIC that I'm using third-party record keeping? How does reporting work? Is it still applicable? Does it work? Are we timeous? Are we giving the FIC enough information? Are we logging into the dashboard on a daily basis as requested? The message board, I beg your pardon, on the FIC website as requested by the FIC in order to get updated information. Is it mentioned in the RMCP that we are doing that? And that I screen all my employees? And most importantly, that I might have screened my employees in the beginning of the year. Did I screen any new employees? Or did it maybe slip my mind? So we need to look at these things. We need to discuss these things, and we need to have an action plan. We must have an action plan in place. Moving to the RMCP, we touched on it very quickly. A little bit more detail. If you look at guidance note 7A, and you needed to update your RMCP, you needed to make sure that you explicitly define inherent and residual risk clearly in your RMCP. Okay, clearly applying your mind. Where were we? What did we do? And how did we end up? And what did we put in place? And that's unique to each and every business. Now, include beneficial ownership and PEP screening procedures and reflect a risk-based approach. There is no one size fits all. You need to know who you are doing business with. Again, try and stay away from people that promise you or want to sell you templates. I have said this several times. No issue with somebody giving you guidance or giving you a document to guide you. But taking a template and doing a couple of changes will not suffice. You will be scrutinized because you need to understand what is documented in that document. Align your RMCP structure to cover all the 5 pillars, which were the changes related to governance and accountability, the reinforcement of it, the risk assessment, the due diligence, record keeping, and reporting obligations. These things needed to be updated within the RMCP as per guidance note 7A. Also, I beg your pardon, control documentation and evidence. Maintain documented procedures for each control within your business. Please, for each and every control. When it comes to customer due diligence, onboarding, sanction screening, and reporting, detailed steps on how that should happen within your organization. Keep evidence of training, attendance, and policy acknowledgements. Very, very important. Risk assessment reviews and approvals by senior management. Audit or compliance testing results and remediation logs if need be, and ensure in all documents are version controlled and centrally stored and accessible. The one RMC, the first RMCP that you did, and then you went to go and do the second one because you update it, doesn't, yes, it does update, but it doesn't replace. You need to keep record of all the RMCPs, and as the versions were, as version from version 1 to version 2 to version 3 to version 4, wherever you might be within your organization. By now, some of you might even be on version 10, but keep them all in one place. It might even be that you are asked to please send your RMCP, your previous version, to a regulatory body or a supervisory body conducting a audit. Then I know sometimes it can be a little bit of a daunting task because we're not always sure where or how and to begin. What should I do? Where should I start? So we wanted to try and bring a little bit of a message across to maybe start making you think. Nothing wrong with reaching out and having in-depth conversations. For some people, this might come natural. For some people, it's just something that they find it difficult to wrap their head around. So understanding key risk indicators within your organization. So key risk indicators are measurable signals of potential money laundering or terrorist financing exposure, also including perforation financing. So you should align your institution's risk appetite with your RMCP. Okay. So example of key risk indicators. Where is there a possibility of risk of something that is not in line with what was expected when onboarding a specific, whether a natural person or a legal entity? For an example, sudden increase, if your business plays in this space, sudden increase in cash-based transactions. Client with high risk jurisdiction or sectors, frequent changes in ownership or account activity patterns, delayed or incomplete customer due diligence documentation. I've mentioned this in previous sessions before. We had several sessions this year. It is required that an accountable institution, if your RMCP sets out when it comes to customer due diligence that you need to get certain documents, please make sure you get those documents. It actually talks about screening and due diligence before entering into the business relationship. If you are not getting the documents that you are asking for based on your RMCP, that should raise a question of concern, and might just be that it might just be a situation where you need to go and report something. Also use key risk indicators to prioritize monitoring and allocate compliance resources efficiently within your organization. It's about being aware of what is going on around us, not thinking it will never ever happen to me, because that is not the case. I've had too many stories over the years of dealing with accountable institutions, and some of them have amazing stories. It's really about applying your mind and knowing what's going on, and most importantly, knowing who you are doing business with. Link your key risk indicators to the reporting process. I think that's very, very important. Okay. Because if you have key risk areas identified, you're going to have a clear understanding of where there's a possibility that I need to go to my FIC compliance officer and I need to report. Okay. Know what risk areas are. Know what is suspicious. Accountable institutions should train their staff on suspicious activities and give them examples of what might be suspicious. Integrate your key risk indicators into monitoring into your ongoing due diligence process as well. Ongoing due diligence, extremely important. It's about onboarding a client, it's about doing transactional due diligence, and it's about doing ongoing due diligence on your clients. That is extremely important. Also use those indicators to trigger enhanced review or escalation to compliance officers. I'm concerned. We need to talk about this. Your duty is just to reach out to your FIC compliance officer. That's it. FIC compliance officer will take it further. FIC compliance officer's duty is to report to the FIC. The FIC will then take it further and keep you in the loop. Establish thresholds for suspicious transactions, cash thresholds, terrorist property. Know where you are overstepping. Know where it's becoming areas of concern. Where do I need to step in? Where do I need to dig a little bit deeper? Ensure that your reporting system captures data to support the indicators, frequency, geographical type, client type, all of these things. Regular review of your key risk indicators is based on actual case outcomes. That's why your RMCP needs to be unique. Your business is unique. Very difficult for somebody else to do a business risk assessment on your business. It's actually impossible. It can be done in collaboration with people that have enough knowledge to guide you and take you there. But somebody cannot do it on your behalf. It's literally impossible because you know what happens in your business. You know who your clients are. You know how your day-to-day operations work. And that's why I'm saying, please be wary and careful of just using templates. Practical reporting guidance: always report as soon as a suspicious activity or transaction arise. Okay. No need for proof of wrongdoing. This is very, very important. You need to report. That's that gut feel. Don't wait for something to happen before you report. That's after the fact. Be proactive and report. It's just a report, ladies and gentlemen. FIC will take it from there. They will do the necessary investigations. Don't wait for something to happen. You've got an uncomfortable feeling based on your risk indicators that you have, based on what it is that you've set certain parameters. Go and do the necessary reporting. Reports should be clear, concise, factual, and avoid subjective options. Okay. Please make sure that you share enough information, because if you don't, the FIC will come back and ask you more. The reasons, the transaction details, the dates, the values, the parties, steps taken internally before reporting. And please make sure that you keep evidence of internal escalation and management to review, and of course your reporting as well. Maintain confidentiality. Reporting staff are protected under Section 29.3 of the FIC Act. Please tell your staff that. Reporting is done anonymously. Nobody knows who the reporting is being done, and that needs to be respected and protected, because people are doing that out of good faith, complying with what regulation requires them to do. Then, as I've said to you, South Africa is off the grey list. As you know, that was great news. Everybody was excited. I received messages from so many people. And it is brilliant news. But unfortunately, we cannot take our foot off the petrol. Because it does not relax the FICA duties that is required by us as accountable institutions to be executed. All amendments is still in force, in legal force, and all the updates coming will still be legally enforced. Ongoing expectations by the FIC, Prudential Authority, SARB, FSCA, supervisory bodies will continue. Okay. We have set a standard. We need to maintain that standard. To maintain is sometimes a little bit more difficult. You will not see less audits. You might even see increased audits going further to ensure that we do comply with this piece of legislation at all times. Okay. Please note, yes, it's great that we're off. It means something for South Africa and the economy and countries wanting to invest in us and all of those type of things. But we cannot relax now. This will not go away. Okay. What you must maintain is your risk-based approach when it comes to compliance of anti-money laundering, customer due diligence, including beneficial ownership identification, enhanced monitoring of PEPs and high-risk clients, targeted financial screening, suspicious or unusual transactions, comprehensive record keeping, The more records you have, the better. The better you can provide the FIC with information relating to a client, the easier for them is to conduct an investigation, and it shows in good faith that you've kept and tried to keep as much as possible in order for this to happen. Okay? So we are off the grey list, but it's not done. Okay, because what's next? The Financial Action Task Force is already busy preparing for our mutual evaluation report, which is scheduled to begin early of next year and will roughly run up to October of 2027. That's just estimated dates that I'm giving you. So, which means that they will be monitoring South Africa across effectiveness of this piece of legislation and then provide us with a report. Remember, it's the original mutual evaluation report that put us on the grey list. So they're already preparing for that. So the regulators themselves, the bodies, whether they are the regulator or supervisory bodies, they need to keep on pushing as well. Okay. Institutions must demonstrate effectiveness, not just technical compliance, not just ticking a box, going the extra mile and applying your mind. That's what it's about. We're not just ticking boxes anymore. Continued public-private collaboration remains critical to maintain South Africa's integrity. So still a lot of work to do. Got to keep our eyes open, got to play our part, act in good faith, because this will be with us. Okay. Then, if you weren't aware, there's amendments that were proposed to the actual bill, and it was proposed in 2024. It's still under review in 2025. What this aims to do is to update the FIC Act and related legislation. And this would introduce tighter due diligence requirements, public beneficial ownership registers, heavier penalties, expanded powers of regulators, some of them that I'm issuing. So we already know that sometime next year, except if there's changes in my business, or if it's time for my review, we are going to update the RMCP again. We at least know of one. There might be more, but one needs to plan for that accordingly. Okay. You need to plan for that accordingly, whether you do it internally or externally. Okay. That remains a choice of the accountable institutions. In your journey, ending off at 2025, looking towards 2026, please remember the 7 pillars. Please make sure your registration remains the same and correct. Please make sure if you have a FIC compliance officer that is resigning this year, that there's enough time to change to the new one. Because if that person leaves, you do not have access to the username and password, you are going to have issues. You're going to miss messages on the message board. You are going to miss communication. If there's an update on the TFS list, you might even miss the FIC asking you for specific questions based on a client that you might have. You do not want to be in that position. Make sure you keep on training your staff and clients. Okay? If you have not done so this year, please do so ASAP. Okay? Governance, enhance your governance, make it part of your day-to-day, build in extra layers. It might take a little bit of effort, might take a little bit of planning, but as anything, it becomes part of our day-to-day activities. It becomes part of what it is that we do. It becomes part of our governance. Therefore, the better you practice it, the easier it becomes. Your customer due diligence, make sure it is a requirement that it's all up to date. And number 4, it is documented in your risk management compliance program. Make sure record keeping is up to date, meeting all the required standards. Going forward, if you need to relook at how the way you keep records, please do so. And of course, the reporting obligations that we have. And just to end off today's session as a reminder for the FIC compliance officer within the organization. Just a refresher on your duties. You need to make sure that those 7 pillars of compliance are met. That's number 1. Make sure the registration is up to date. If you are adding a service to your accountable institution, you might not do trusts. You are adding that. That means that you're going to have to dual register. That means you need to plan. You need to update your RMCP. Take this into consideration with your planning for next year. Make sure the RMCP is up to date. That training is done, not just on the act itself, but the RMCP as well. And keep evidence of how you assessed your staff if they understand the RMCP. That's also very crucial. Maintaining, reviewing, and updating of the RMCP and the policies and procedures throughout the year as and when required, and whenever there is a publication that comes out. You need to make sure that the process when it comes to verifying client risk rating, risk matrix, and the sources of funds are still applicable, and it still makes sense in your business, and that there's a process in place at all times. You will be the individual that submits the reports to the FIC, and if the FIC is looking to speak to somebody within the accountable institution, you will be the middle person who they reach out to. You are the one they liaise with. Ladies and gentlemen, thank you for the year. Thank you for all the sessions that you sat in, to the people that we helped throughout the year. It was great. We will be here to continue and help. Thank you again to LexisNexis for creating a wonderful platform. If we don't have a platform like this, we can't get to everybody. So thank you so much for that. Thank you.
Thank you so much, Cedric. We said that not only do you need to have the controls and the policies in place, you also have to be tech enabled in this day and age. I'm going to hand over to Vinette, who is going to showcase how Lexis KYC can assist as well. Vinette, welcome. Good afternoon, and over to you. You're on mute.
There we go. Thank you, Melinda. Thank you, Cedric. Always lovely to listen to what you've got to say and also reminding us. So I'm going to share with you what we at LexisNexis can assist you with verification tools, specifically speaking to the verification of your customers as well as the verification of your staff or your employees. So specifically looking at how LexisNexis can assist you. So Cedric also touched on, now you will see when he said, let's say that you do have an extra entity or a trust that you're adding. So when you look at Lexis KYC, it covers the verification of natural persons, looking at the identity, the contact details, and then also the list, the world compliance, specifically looking at the TFS lists. That's been updated now, the 7th of November again. Looking at companies, trusts, foreign individuals. So that is the verification that Lexis KYC offers and can assist you with. And then specifically looking at the Directive 8, where we've got the Lexis Ref Check, where we do the enhanced verifications for your client and your employees. So both Lexis Ref Check as well as Lexis KYC, that's online solutions. So there's no installation required for these products. You would have seen the poll that you could have just checked to say, or just tick to say that if you need some assistance or that you want to sign up for both of these solutions, you can just tick on that. So diving a little bit deeper on the benefits of Lexis KYC, and then you will also see on the right-hand side, for those that's already using Lexis KYC, this is what the platform will look like. There's a comprehensive data source specifically verifying the IDs, the addresses, contact details, as well as your world compliance. It beautifully integrates with Lexis Convey. So once you've captured the information in Lexis Convey, it will then do the verifications, take that data and then do the verifications in Lexis KYC. User-friendly interface, and then doing and assisting you with your due diligence, the enhanced due diligence, and then suitable for any size of organization. So whether you are a one-man band or you are an organization of 50, you can use Lexis KYC, not paying for the amount of users, but only for the amount of verifications that you will do. Just having a look at RefCheck. The difference is with RefCheck, doing the background screens, and you will see that we've circled specifically doing for the Directive 8 checks that you need to do. That is covering your criminal checks. There's your ID verifications. There's your employees history screening, your matric checks, as well as the fast-growing social media checks. So that is all built into RefCheck. And then you will also see for RefCheck, you will need to sign a consent form, which is built into RefCheck, which can be signed via Lexis Sign, one of our other products that's built into the Lexis RefCheck. So just a quick update of what we offer when you look at all the little diamonds on the screen: transactional billings, no monthly costs, batch features, which means if you've got quite a large customer base, we can do the batch searches for you. There's another poll that you can just tick for us. We offer free online training as well as the free online support, whether it's you can phone in almost like, or do a WhatsApp chat almost with the online support, web-based. And then also, like I said, no installation or registration fees. So you would have seen the poll now. Please let us know if we can contact you, do a demo for you, assist you, and looking forward to sign you up. That is it from my side. Over to you, Melinda. Thank you.
Thank you kindly, Vanette. Cedric, I think we have a few minutes. We have been very busy with the Q&A section. And Matt, thank you also from our side to assist with this. Not a lot of questions still open. I think also what we've picked up from some of the chat also, will a recording be available afterwards? A recording will be made available on our LexisNexis YouTube channel, as well as on the KYC platform in the Pendo. As you saw it there in Vanette's slide, the bottom of the left-hand pane on the solution. And if you don't receive it through any of those channels, please reach out to your account manager, who would gladly also share that with you. I have one in the Q&A. So it comes down to foreign identity verification, and in this specific instance, a Zimbabwean national. How do we KYC them? Cedric is the question.
You use LexisNexis. It's first of all, there's screening that needs to take place, of course. As you know, that's the most important thing. Then you need to identify and verify. That's why using screening platforms are so important. Who you use? Do they have the functionality to do that? Can they verify via passport? Can they verify whatever the case might be? You need to do that. Then you need to follow your actual due diligence process relating to your risk rating of that specific individual. But yeah, that's why using organizations that give you the functionality to do that is extremely important to do so. You definitely need to screen. It's still seen as a foreign national.
Yeah, I think also what I can add there is we are very much reliant on the availability of the nationals within those regions. And Zimbabwe is one of the countries where informations on their nationals are not made available through our screening platforms. So additional customer due diligence would need to be put into place with if you handle a transaction with regards to foreign identity verifications of those nationals as well. Another question. How do we verify foreign nationals falling outside of the Lexis KYC for foreign nationals? So that exactly comes down to how do we verify if it's not available on the platforms that I can do my screening or verification through that specific platform. I think what the question comes down to, if I can't screen it through a tool, what measures do I need to take to screen the individual then?
Yeah. Again, that's a decision based on what again, that's the risk-based approach. That's what am I going to do in order to do an enhanced due diligence on that specific individual from verify, identify. You're going to have to do additional checks, whether it is asking for certified documentation, whatever the case might be. But again, and we also need to take into account relating to the services that you are going to render to that individual. I think that's also very important. Service, products, and all of those things. It is sometimes a little bit difficult or frustrating, but you're going to have to try and do something. And that's where the brainstorming and the talking comes in.
Absolutely. We've got a question here also. Why is it important to have a valid passport during verification? The personal details, date of birth, name, etc. won't change. So I think the question is, if I understand it correctly, why in addition to the personal details do you also need to have the valid passport during verification?
I think just for the simple reason, I think this might even fall outside of the scope of just FICA. If the passport is not valid anymore, it's not valid anymore. And why? And then one needs to start asking the question, but why do you not have a valid updated passport? Are you waiting for it? Have you applied? What is the issue? So that's the type of discussions one will have to have. But valid, yes, because it protects the integrity of the documentation and your due diligence process.
An interesting question, Cedric, and I think I'll also attempt to answer the question here is, can LexisNexis source or provide information on ultimate beneficial ownership and shareholding verification? Now, this has been a challenge within the industry altogether. And although we've seen an attempt as well as a very strong mandate from government side, as well as SIP-C for the businesses to submit those certifications and beneficial ownership shareholding onto the SIP-C website, that data has not been verified by SIP-C, neither has it been made available to any of the public as part of the public data source that we currently leverage from. Now, we had a similar conversation. It's actually strange that exactly on this point, where do we get that from? And Cedric, I think this is where we're going to tag team, because ultimate beneficial ownership and shareholding also comes down to you engaging with the customer to provide you with documents to verify what they say is indeed the case.
Yes. Well, the first part of your answer is 100% correct. We are hoping that we will get there one day in order to make our lives a lot more easier, specifically when onboarding. That is the aim. Not sure when we will get there. You can only do what is reasonably required of you as an accountable institution, of course. You need to determine beneficial ownership or whatever the case might be. So if you ask for an organogram, or if you ask for the registration documents of the company to see who the directors are, or whatever the case might be, then it becomes, unfortunately, a little bit of a manual process. And that's where the frustration lies at this moment in time. So reasonably, where can I go to? Where can I try and gather the information and ask for the information? And then one needs to take it from there. Hopefully soon there'll be a more permanent and better solution for this going forward.
Also, thanks, Cedric. Another interesting remark made about AI. Is there a platform AIs can use to confirm ownership and control structures of entities? And again, I think, is there an AI? Definitely in the day and age that we live in, there will be an AI tool that can actually verify. The key source here is it reputable and authoritative content to which you can verify, I think is indeed the challenge that we are all facing currently.
Yes, definitely. Yes, somebody will probably come up with something. There might even be something already. People are very, very innovative. But I think, as you said, the integrity of the data, and then AI, of course, because I see there's a comment, AI, in this case, we're talking about artificial intelligence, not accountable institutions. I see there's a comment. The integrity of the data is extremely important. Is it live? Is the updates live? Or is it taking information? Where is it getting the information from in order to compile that information? That's crucial as well.
Melinda, you are on mute.
Sorry, I just had some loud noises here in the background. The AI that the question referred to is accountable institutions. And I think we have answered the question that there's no single golden source to which we can verify ultimate beneficial ownership and company structures. That will depend on documents. We've got just a few minutes left. I'm going to do one more question and then we're going to do our acknowledgements and thank yous. Do you onboard only the borrower in a transaction, or do you onboard the corporate guarantors and directors?
I need to elaborate.
I think this one speaks to more details before we can actually answer that. Yeah. So Rita, if you don't mind, I think we will definitely take this offline and get some further details, whereafter we can advise you on the possible routes that you can follow. With that said, I think it's been a very great year. The series of the FIG webinars that we've hosted with the conjunction and partnership with Masted has been great. It is almost in preparation for this, I was thinking about it's our monthly family meeting. We used to have regular ones that a while ago, and it actually reminiscent with me. It resonates as that type of meetings. And again, like Cedric said, thank you very much for your part in making South Africa a better place. Thank you for being a responsible corporate citizen. Your efforts will definitely be rewarded in making South Africa a better place for all of us. Yes, we achieved the great milestone of the grey listing being moved, but there's still a lot of work that needs to be done. And let's not let our efforts that we've put in place already go by the wayside by just stopping this. This is a living, can I call it, policy, part of your business operations, and therefore not going away anytime soon. Thank you so much for attending this afternoon's session. My partners, Vinette, colleagues, for facilitating this webinar. It's really been a great journey, and looking forward to revive the FIG webinar series soon as we go into 2026. Look out for the invitations. Have a great time and hope to speak to you all soon. Goodbye, everyone.
Thank you. Bye.